Hi, everyone. Welcome to Bitcoin Mining and Capital Markets. My name is Collin McVicker, and I am a finance attorney here at a large international law firm. I am very pleased today to be here with Will Iwaschuk. Will is the co-president of Cipher Mining. Next, we have Greg Mumford. Greg is an investment banker at Stifel. You won't find a deal or structure that Greg doesn't know about in Bitcoin mining. Last, we have Jillian McIntyre. Jillian founded a hedge fund this year, 221B Capital Partners, all female-owned, and really looking forward to this conversation. So to just set the stage here, the public markets for Bitcoin miners have been so incredibly important because of something called Operation Chokepoint 2.0. And that is big banks like Wells Fargo, JP Morgan, Citi, Bank of America have been restricted from even providing Bitcoin miners with corporate bank accounts. And what I am most focused on is sort of because of that reason, they have been relegated to very dilutive, very expensive forms of debt financing. And what I'm very enthusiastic about is 2025, that's set to change for two reasons. Number one, President Donald Trump has said to immediately end Operation Chokepoint 2.0. And number two, parts of the industry are pivoting to high-performance computing. So for our first question, with that context in mind, Will, there's an arms race for power from these hyperscalers, Microsoft, Meta, Amazon Web Services. Will Cipher Mining ride the wave of the HPC arms race?
Thanks, Colin. So, look, I'll start by maybe taking a step high and high-level talk about what we've tried to build at Cipher Mining. So, and then I promise I'll bring it back to the subject of this panel, which is Bitcoin mining and capital markets. So, we have always, as a management team and founders of the company, tried to build a company that is a infrastructure and data center construction and operations company in general. We deliberately hired very senior, experienced people on our construction and ops teams who have built and run hyperscaler data centers for companies like Meta and Google and Vantage. And we have always looked for opportunities to develop sites that have good power. At this point, I think of the as you said, over the last year or so, the trend in the industry, and there's been a lot of talk. You can't pick up a newspaper without reading about the massive compute load that's coming from AI in the next few years. And so for us, we definitely think of it less as a pivot, frankly, and more of a balancing exercise. So we've deliberately amassed a massive pipeline of potential data center sites, about 200.5 gigawatts of power. And as a management team, our job over the next few years will be to allocate those opportunities between Bitcoin mining on one side and HPC leasing on the other side. And why that's important for capital markets and capital planning purposes, and I'd love to hear Greg's view on this as we talk through the panel. But the cost of capital for Bitcoin miners, as you alluded to, is very high. So these are sort of serial project finance companies that have high capex and have traditionally, debt financing has been closed to those market participants. In contrast, on the HPC data center side, if you have a high quality credit counterparty and a long-term lease with a hyperscaler, you have access to construction and other bank financing that significantly lowers your cost of capital. So, predictions are very difficult to make, particularly about things that are going to happen in the future. But my hope, at least, is that spread between the cost of capital for Bitcoin mining and the cost of capital for more traditional AI data centers starts to narrow. In the meantime, we run both business verticals and view them as highly complementary.
Sticking with you, Will, so Cipher has the Lake Barber site. It's near water. It's close to the I-20 fiber corridor. Cipher also has, I think, 5 other sites, all in Texas. Is there a plan to convert a portion of Cipher's fleet to HPC other than just Lake Barber?
So we actually have 10 sites now.
10 sites.
Again, sort of less of a, it depends on which site and which application you're talking about. So some of our sites, for example, are in far west Texas where water is harder to come by and there's less access to fiber and things like that. Those are highly desirable sites for Bitcoin mining because Bitcoin mining is this unique, flexible load that is location agnostic and instantly curtailable. That hasn't traditionally been the case for HPC data centers. As you said, they look for the traditional data center corridors that have access to water and fiber, and they need to run data centers at the 5 nines of uptime. That's not a thing in Bitcoin mining, and it's uneconomical most likely to run at 5 nines of uptime in Bitcoin mining. And so again, it comes back to really just optionality and allocating the opportunities. So we will have some data centers that are highly desirable, like the Barber Lake site for HPC, and others that, at least in current markets, are probably better as Bitcoin mining, which we love. It's an awesome position to be in.
Well, that sounds very bullish to me. I'm glad I'm in the stock. Let's get the iBanker and hedge fund manager in the mix. So for the next question, so Greg first, then Jillian. It seems to me that there is a fundamental divide between Bitcoin miners, those that are looking to pivot a portion of their capacity to high performance computing, and those that are sticking to their guns and mining Bitcoin. How do you all sort of make the decision with the management team on whether to pivot and whether to not? What do those conversations look like?
Yeah, I'll start. I think first and foremost, Bitcoin miners are actually uniquely positioned to even think about diversifying into this vertical for a couple of reasons. They control massive amounts of energy assets. They are experts in building application-specific infrastructure, digital infrastructure, at large scale. And they can raise massive amounts of capital very quickly, as we've seen. What this does is this puts them in a position where they can be a first mover in the HPC side. They can go and they can actually break ground on data centers in the short term. Whereas more traditional players are probably queued up for interconnections for quite a while. Being a first mover in the space and actually going out allows you a bunch of different advantages, including signing sweetheart deals, getting better terms, getting marquee offtake agreements. So it's really an advantage for Bitcoin miners when they think about should they pivot into this business, or like Will said, should they add a complementary vertical to this business? So when we think about what advice we're giving clients when they're debating if they should think about HPC as a vertical, it's really think about monetizing your power on a case-by-case basis. Not every site is the same, and not every site is well suited for either Bitcoin mining or for HPC. And then when you've kind of decided how you want to monetize that power asset, think about financing it in a way that's going to help optimize your capital structure.
Jillian?
Yeah, so thank you, first of all, for having me. This is a great location. So I run a fund, 221B Capital. We focus on long-short investing across themes in technology, renewable energy, and industrial companies. And I'm really excited by what's happened in the Bitcoin mining space. When I started looking at it about 2 years ago, there was just a massive level of skepticism. And probably being best known as a short seller. There are some challenges with the model in terms of access to financing, but I really do believe that that's now changing. I think the institutional investor is now looking more openly, and that's driven by their own investors, by their LP investors, and whether or not they are allowed to invest in the group. I'm on the advisory board of one of the largest public Bitcoin mining companies, and what it really comes down to your point, is sort of the return profile of whether I'm going to stick with Bitcoin in my hodl or whether I'm going to invest in HPC. So if you believe Michael Saylor's projections and you're looking at an annual rate of return of about 22%, then you want to be able to exceed that, right, with your investment in an HPC. So I think for the first time, these companies really have tremendous optionality. I think that raising capital, you saw with Marathon Digital, the $1 billion deal that they did on a zero coupon, just really changed the landscape, I think, in terms of optionality and what they can do.
Well, while we have you on the hook, Jillian, you're best known in the market as a short seller. In fact, right after this panel, you're going over to teach the SMU business students about short selling. Seems to me Bitcoin miners are targeted all the time by short sellers.
Sure.
Why do you think that is?
Oh, it's very simple. So it's the financial structure, right? So historically, a lot of the companies have not had access to capital, so they've issued ATMs, right? And those ATMs really act as a significant overhang. Or they issue convertible debt, and the structure is normally if you don't have a covered call on the debt, then anyone who owns the convert is going to short the stock against the convert if they buy it. So you're in sort of a catch-22 sort of position where, but again, I think that is significantly changing. And from our perspective, we love the fact that there's been a misunderstanding of the business models and the fact that they're changing how they work with the grid, so sort of the symbiotic relationship, how they can reduce the power through some of their methods of waste to energy. So I think that it's really changing fundamentally now.
Well, the market clearly loves it when Bitcoin miners change or pivot to the HPC. So turning back to Greg, Stifel, premier investment bank in the space, but also you guys have a deep understanding of data centers, power assets. Can you shed some light on how these HPC deals are actually structured?
Yeah, I can try. I mean, I think the trick with that right now is that HPC in general as a term is a catch-all bucket for a bunch of different businesses that are not identical. So what I mean by that is that certain infrastructure providers are bringing powered shells to market and then interacting with a hyperscaler as the offtake, and the hyperscaler will put all the infrastructure in. And then you have that, which is a low CapEx spend, all the way to being a neocloud, where you're actually providing the compute and owning the GPUs. And all of that right now is being bucketed into HPC. So, as you kind of move up the CapEx spectrum, your economics change pretty materially, and the way that you can structure a deal around those economics changes materially. So, if you are on the lower end of the CapEx spectrum, spending $1 to $2 million per megawatt, providing powered shell, you're probably looking more like a landlord, earning a yield on cost. As you move up that spectrum, and the value that you're providing is no longer just access to power, it's actually critical IT load, and it's electrical infrastructure, and that's the value. Then you're starting to think about your economics on a per kilowatt basis, and then the GPU as a service or the neoclouds are actually providing compute to completely different end users. So each of those have different economic profiles, allow you to structure them differently, allow you to get different types of financing. But I think the big difference between all of those business models and Bitcoin mining more traditionally is just contractual cash flows with a stable counterparty.
Speaking of different types of the financing, for me, for 3 years, I've been trying to get my bank clients, namely Wells Fargo, to actually take Bitcoin mining seriously. And I feel that the pivot to HPC and GPUs is potentially a route in which you can actually get bank sort of debt financing for. So talk to us more about, CoreWeave famously was mining Ethereum, then that stopped, but now they're providing just general GPUs. Microsoft is their biggest kind of customer, and JP Morgan's banking them. So maybe just talk just a little bit more, Greg, about co-location and how those deals are actually structured, and Stifel's relationships with the banks to actually provide that debt financing or set that up for them.
Yeah, I mean, I think if we'll talk about it in the context of a Bitcoin miner because of the topic of the conference, but I think as a Bitcoin miner that wants to add that vertical, you need to think about how you want to structure that in a way that a lender is able to ring fence that cash flow. and really think about lending on a project-by-project basis to that operation. So you can think about dropping that contract with an off-taker into a SPV. You could start a joint venture with a capital provider. There's a lot of different ways that you can structure one of these deals, but ultimately you want the lender to be able to ring fence that cash flow and not take risk necessarily on the parent co.
Got it. Yeah, it seems to me that the Bitcoin miners are going to start to perhaps look more like traditional data center companies. So let's get sort of Will's take on this. Will, compared to traditional data center companies, you have Iron Mountain, you have Equinix, you have Digital Realty. Some of these companies, Will, are 80 years old, and they have millions of dollars of bank financing. When you look at Cipher Mining, it's 3.5 years old and has more power capacity than all three of those traditional data center companies combined. And oh, by the way, no debt. To what extent do you think that those factors contribute to Cipher Mining being undervalued?
Well, I think you just said it. I'm a public company executive, so of course I think our stock is undervalued and probably always will. But in all seriousness, I do think that, again, there is an opportunity there. I think the Bitcoin miners and the multiples that the market assigns to the companies has room to grow as people realize that the assets that companies like Cipher Mining have built and acquired over the last few years are desirable assets for both Bitcoin mining and HPC. And so, I would love to see that spread between market caps of some of these big companies that you just talked about and companies like Cipher Mining close over time. I think we are undervalued, and people are not putting enough value in the value of those assets that are highly desirable. You can't read a newspaper article. Every day there's another article about AI needing power in the very short term, and there just aren't that many short-term available powered sites out there.
So Jillian, you're in the business of valuing companies. So do you agree with Will that some of these Bitcoin mining companies that have very scarce sort of sites, massive compute powers, are sort of more undervalued?
So I think there are a couple of things that are in play. So the first is that the institutional investors are now more focused on the group. They haven't been. Like I mentioned before, it's either the LP investors literally won't allow them to invest, or if you're a very big firm like a Tiger or such, historically you may not have given any value to the HODL, right? So if you take MicroStrategy, Mara, it's like 46% of the market cap is HODL. So if you're valuing that at zero, historically, then you're not going to get a very high valuation. So I think that that's fundamentally changing. So now you've got more investors who are focused on this group. I think the second thing is that the wealth managers are also focused on the group. It happened after the Bitcoin ETF was approved. And one of the things I do as a fund is I host in-person events in New York. If anyone's in New York and you'd like to attend one, please just give me your business card. But we get groups of CEOs together to discuss some of the trends, and we also invite some of the wealth managers, whether it's Morgan Stanley, UBS, JP Morgan, and they've been prohibited to go out to their investors to actually sort of suggest or recommend investing in either Bitcoin ETF, or the companies. That's about to change imminently. So now you've got a real focus of significant capital, focus not only on the ETFs, but also on the companies. And then with respect to valuation, the way I think about it is very much on a case-by-case basis. So sort of Greg alluded to before, the HPC companies are cash flow. They're sort of REITs, so you're going to measure them on a discounted cash flow basis. You really can't do that with the miners. With the miners, it could be that they have technology patents. How much do you give them for the HODL in terms of valuation? So it's very much a case-by-case basis, but I do think that they are undervalued.
How much of this is just all downstream from the fact that that banks can't hold Bitcoin as assets. You know, like that to me seems like once banks are allowed to hold Bitcoin as assets and extend credit using that as collateral, do you think that that plays another factor into this?
Absolutely, yes. And then you've got Treasury, which I think, Michael Saylor tweeted yesterday that he was talking to the Microsoft board about potentially holding Bitcoin. So the more that you have those kind of dialogues, the more interest and the limited amount of, there's a scarcity factor here as well. So I'm originally from London, and I moved to the States because there's so many more companies in the States to analyze than there are in Europe. And so that will also play into it, I think.
So turning to Greg, Hut 8 is using GPUs as a service. I think you're going to see some contractual cash flows start to flow in 2025. Do you think we'll see the first bank financing of a true Bitcoin miner in 2025?
I hope so, yes. I mean, I'm bullish on the space. I've been covering the space since 2017. Chokepoint 2.0 was real. The administration coming in is, I think, a fantastic win. I think banks are going to have to start really looking at these companies seriously. I think that there is a lot of money on the sidelines to invest, especially in infrastructure as it relates to kind of more traditional data centers on the HPC side. But I also think that the business of Bitcoin mining in general is better understood than it was over the past few years. The ability to support grids and integrate with generation is better understood than it ever has been before. And if banks are able to start custodying assets, I really think that there's this unbelievable optionality embedded in all of these companies. And yeah, I do think we'll see traditional financing soon.
So Will, what do you think?
Yeah, absolutely. And again, the market is there. Obviously incumbents, like you said, that have 80 years of experience doing large infrastructure, data center construction, are incumbents. But there's no reason that a company that builds data centers like Cipher Mining should not be able to access regular way construction and bank financing for a long-term, high credit quality HPC tenant.
Yeah, it seems like the convertible debt market, that's open, but otherwise sort of very expensive forms of financing. So just sticking with you, Will, I think one thing that's rare and scarce, of course, is Bitcoin, but perhaps something that's even more scarce and more rare is just access to these high-quality sites. When you're thinking about, the value, how hard is it to kind of value these sites? I don't know, if Microsoft comes in and says, I'll give you $1 billion for your Lake Barber site, it seems quite difficult to value. So how are you thinking about, that part of it?
Look, we spend a lot of time on that, and that's been part of the development of our company over the last 3.5 years, has been building this pipeline of quality sites. So I do think there's a market there that it's hard to say what the value is on some of these sites. Some of them, we try to be very disciplined when we're acquiring sites. We try and, we end up in a lot of data rooms looking at sites, ending up in a bidding process, and usually lose. Sometimes even in the first rounds because we're not bidding aggressively enough. That said, it's kind of what you bring to that site that unlocks the value of the site. So if we find a fantastic site in West Texas, that's just a plot of dirt for the most part when you're first buying it. So that valuation we try to purchase at the low end for the dirt or perhaps the interconnection or the access to nearby Encore facilities. But it really is the expertise and the work of the team to actually take that pile of dirt or plot of land and turn that into a state-of-the-art data center, whether for Bitcoin mining or HPC, that unlocks the value of those sites. So there's a big spread, and I think we will continue to see how that works. We continue to look for new sites. We have not stopped being acquisitive. If anyone has a good site that they're looking to sell, please find me after the conference. And it's an exciting time.
That's fantastic. All right, well, for our last question, trying to do something fun here. I think we're all quite excited of 2025, a new presidential administration coming in to office. So we're going to start with Jillian, then Greg, then Will. Say Donald Trump asked each of you to be on his Bitcoin mining task force. What is the one thing that you would ask for and why? Jillian? You don't want it?
Will, but no, I'm happy to. I mean, for me, it's more regulation. It's better structure and understanding so that the banks can be involved. That's, to me, the primary thing, is getting the big banks behind Bitcoin.
Okay. Greg?
Yeah, I would say in general support. Support as opposed to what we've historically had, which has been quite the opposite of support. So.
Agree with both of those answers. Maybe I'll say sort of the opposite side of the same coin. I'm not sure there's anything we need to ask for. We've been in this environment the last few years where there was a so-called anti-crypto army that was out to shut down the industry, and we now have an incoming administration that is pro-crypto, pro-Bitcoin, pro-innovation, and frankly just pro-business. And so that's a fantastic opportunity for crypto and the U.S. economy in general, and I'm very excited for it. I don't think that we've ever, as an industry, sort of needed to look for particular asks or subsidies. We just want to be able to compete and innovate and build our businesses and drive shareholder value.
Amen. Well, so we still have 2 minutes left, so maybe we can just end. Will, one thing that I was thinking of, I think everyone here knows the price of Bitcoin at any single second was $98,000 right now, but nobody really talks about the value of it. Maybe you can shed some light on how you think of just the value of it. So clearly, President Donald Trump sees value in it, that it's an asset. I think someone even gave him 1 Bitcoin in Nashville, so he probably likes it now. Yeah. But do you think about that part of it, of the price obviously matters for your business, but also just the value of Bitcoin in general?
Do you want me to go first? You want to go first?
Okay.
Yeah, Greg, go ahead.
It's a really interesting question, and this is the most exciting sector that I've ever been a part of because of the value that different people ascribe to Bitcoin. Everyone, I think, values it in their own way, what they want from owning it, where they think it's going to go. It creates a really dynamic space with a lot of like-minded people together.
Oh, thank you. Will, you want to chime in?
I tend to think of it more technically in kind of the Bitcoin mining context. Frankly, Bitcoin price, while important and exciting, and obviously it'll be fun going into Thanksgiving next week with Bitcoin knocking on $100,000 or maybe even exceeding it by then, who knows. It's frankly sort of less important to our business than hash price and hash cost. And so those are the metrics that we plan for. I think that's a better way to run a business than to just sort of hope price goes up. But obviously, it's also fun to be in bullish markets. We're in a great place right now.
Thank you. And with that, our time is up. Thank you all for joining us. Hope you enjoyed it.